Hey everybody, welcome back to the channel. Today I want to go over a market maker buy model that is in between the silver bullet hours. Okay, so it's actually during the lunch hour. And I want to show you how you could spot it and how you could have traded it. Okay, so right now I don't have any of the session liquidities on here. All I have is the Silver Bullet Pro showing me the fair value gaps. Obviously this is a market maker sell model right here. But when we have SMT with ES, let me show you that right now. And I have to lower it up here and show you, shrink this and show you this like this, and show you kind of like this. Okay, so this is actually this one right here is lower. Should just do it like this. Lower, higher. There's SMT. Okay, and you'll get that with market maker models. They'll be pretty big like that. Okay. All right. So let's start looking for things. So when you're seeing this, the first thing you're going to do is you're going to start marking your P rays. So you're going to say, hey, listen, this is a fair value gap. Now it's an inversion, right? Now, could you take a entry if it trades back into it? You could. It'd be very quick like that. You could have entered right there. That's not what I did. I waited for the market structure shift. Now you can use this as your market structure shift. I was actually using this one. It doesn't matter. You can use either or. I like this one. This is what I was using. Now it trades back into it. Okay, right there. I will buy one contract. Okay, so I'll put my position on here. And let's move this here. And I'll show you why my targets are where my targets were. Right here. Okay, here's why my targets were when I pull a fib from here to here, the manipulation leg. It's right at 2.5 standard deviations, right? And what 2.5 standard deviations is right in this fair value gap. You have another fair value gap here. So somewhere in here is where it's probably going to reverse. I want the low-hanging fruit. I'll take $1,500 and give up this. No problem. It won't bother me a bit. Okay, so I'm expecting this to be a market maker buy model. That's what I'm expecting. I'll put that on here, market maker buy model. So we shall see what we have here. Okay. That was your second chance to enter, by the way. Okay. So now we see this as an inversion fair value gap, right? Now we want to see, you can use order blocks or inversion fair value gaps. I'm going to show you inversion first, and then at the end of the video, I'm going to change them to order blocks and show you. A lot of people use order blocks, a lot of people use inversions, so I'm just showing you both ways. I kind of use both, depending on how I feel. I don't really have a bias. But we want to see this holding price, right? Supporting price. They can trade back into it. We don't want it traded through. Wicks do the damage. We don't want a body closure. We want to see it hold, right? So that's a good sign. This is looks like a high resistance liquidity run right now. So it's consolidation right there. Ooh, okay, so like I said, wicks can do the damage. Now, this little turtle soup right here is very telling. This little turtle soup right there. See if I have a turtle soup on here or not. I don't think I do anymore. Nope, no turtle Soup. No more turtle soups. Okay. Well, just cross that low right there. Now I think we're going up. We're going higher. Take out the high. Yep. Okay. Good sign. Next fair value gap would be here, and I'd want that to be an inversion. Once it crosses through, it's an inversion. Right now, it's a fair value gap, but if they cross through it, it's going to be an inversion. So I need to close above, and then I need it to act as support. So I'm just throwing it on there just so you see it. It's got to be a close above. So that's barely a close above. I'll accept it. But now it's clearly above. Now I want to see it act as support. And my target is this fair value gap right here, like I said, mentioned before. Okay. I haven't gone break even yet. Let's just move this up to here. So this inversion. You got 3 PD arrays there plus an inversion. So technically, let's go up here. It would be 3. How did I get 3? Inversion is 1. Fair value gap, fair value gap. There's my 3. I knew someone was going to ask in the comments. Okay, there we go. That's good. Let's see what we have. If we get, see if we get to the stop or not. Don't think we do. But I think what we do is we fill in this fair value gap. We trade into this fair value gap, but don't take out the high. It's a rejection block here. Rejection block works, and I don't know how where this goes after that. Let's kind of play this just to see what happens here. If it comes back up or not. It does. Okay. So that is your based on inversion fair value gaps holding price. Okay, so I'm going to remove these here, and I'm just going to show you real quick with the leave that was our target, and I'm just going to take off the Fibonacci so you can see that good. Don't want anything blocking what you're seeing here. So let's use the order blocks. Okay, so first order block obviously is this one here. Now that's an order block, but technically so is this. So when you go like this, it obviously is held, right? It's plus order block. If you just use this one, just use the body here, you're gonna say, hey, wait a minute, it got traded through barely and then traded back and so it's not really holding price. Well, that's because the real order block is like the big one, right? It's the whole, if there's two candles together. So here's another order block. When it gets traded through, it supports price. I'll make that different so you can see it's different. This is why I don't like using as many order blocks because they're literally everywhere. Here's another one. But it's a good sign to keep saying, hey, does it support price? It keeps you in line. Now, I don't put these on my screen as I'm trading live. I'm just looking and I, mark it with my crosshairs. Is it holding? Yep, cool, awesome. Hey, is this one when we trade above? Is it holding? Yep, awesome. And it actually supports price right here to go higher. I'll show you that here. Order block. I start with the first. Honestly, I start with like these two. I start with the first one, knowing full well that that's truly the order block. Totally get it. So yes, you can mark it. I just don't like having all these. I mean, look at this. This is pretty much one big order block, right? If I can, I'll use the top one because if it's supporting, if it breaks through, I'll be like, okay, the real order block is actually this. So did it really break through yet? No, it's still holding. Cool. Okay. Just to have less real estate on my screen used up by, rectangles. But you can see that this order block here is supporting price to go higher into this fair value gap here. Okay, so there's your order blocks, and then if you took those all off, we had these inversions holding as well. So you had a lot of reasons for price to believe that this just high resistance liquidity run is going to continue working in your favor to hold through this. I mean, this is, let's see how long this is. Let's say the duration at all. Yeah, duration. 57 bars. So for an hour, you held it for an hour. I usually don't hold trades that long. So let's recap. So we had SMT at 106. We had a breaker block, which is our market structure shift here, and we entered, right? We entered, we looked for, 73 points. We pulled our fib from this manipulation leg, and we had 2.5 standard deviations. So that's what we aimed for. And we were assuming this is a market maker buy model, which it is. It turned out to be a perfect, beautiful one, actually. A very nice V shape there. So we know two things. When it's a slow trickle down, like I'd call this a long sell side of the curve, we can expect a long buy side of the curve. When it's a fast sell side, we can expect a fast buy side. Now, it doesn't always work out that way. No, I've seen some that are just sharp down and long back. It's usually when the markets are out of sync a little bit. So either way, this is long. This is just a nice V shape here, market maker buy model. So we took our trade, and then we started marking out inversion fair value gaps. Once they're traded through, we expected them to hold price, which it did. Broke through another one. We expected it to hold price, and it did, and we hit our target. I also showed you in this video that if you didn't want to use inversion fair value gaps, you could have used breaker or order blocks. And now order blocks are the highest up close candle. However, if there's multiple candles, it does add those candles with it. So some of the order blocks are bigger than others. And I showed you that I used the top one, and then I extend it to make the real order block if it trades through that first one. But I don't like having as many boxes on my chart when I'm trading live. So I usually just use the crosshairs on the order blocks and or fair value gaps. But in the video, I wanted to show you both. And so that is the market maker buy model on Tuesday, June 25th, using the Kraken suite of indicators.